Good morning and welcome to the Morning Outlook. I'm James Preston reporting live from 𝐊𝐶𝐥 TV's Sydney studios. And in this program, we take a look at how the day's trades might unfold based on the market performance in the past 24 hours on both home soil and abroad. But we also need to take a look at the external factors that have the ability to impact market performance. So let's begin with the day's top stories. Western Australia Premier Mark McGowan is celebrating the state's enormous budget surplus. Sky-high iron ore prices have fueled Western Australia's record $5.6 billion budget surplus, making it the best-performing economy in the nation. The performance is double the expected surplus of $2.8 billion that was predicted for this year's financial year performance, with WA's performance in direct contrast to other states which were awash with debt and deficit. And New South Wales businesses are set for a prop-up after State Premier Gladys Berejiklian unveiled a roadmap to freedom. The freedoms, which will only be granted to fully vaccinated residents, will come into effect on the Monday after New South Wales hits its target of 70% of double doses. Ms Berejiklian also announced parts of regional New South Wales which are deemed low risk will be released from lockdown at 12:01 a.m. on Saturday, but still subject to some restrictions. Controversy, though, continues to reign supreme over freedom of choice and the right to bodily autonomy. Whilst the government can't constitutionally mandate vaccinations, the roadmap essentially blocks out unvaccinated citizens from everyday life by way of policing, vaccine passports, and passing the buck on to other businesses. There is currently a New South Wales Supreme Court challenge headed by AFL solicitors fighting against such discrimination. Time now to turn our attention to the market performance over the past 24 hours, beginning with the performance on home soil. The Aussie market suffered one of its worst days of the year on Thursday, with the ASX 200 falling 143 points or 1.9%, the sharpest decline since the 26th of February. A slight positive was that the index managed to lift late to finish off its session lows. Losses were across the board as every sector fell, with 95% of the top 200 stocks in the red. Declines were heaviest among materials, energy, IT, communications and financials, while only consumer staples managed to restrict losses to less than 1% for the day. The resources sector continues to be hampered by softer commodity prices. Global crude prices eased more than 1% overnight, which weighed on local oil and gas producers. Santos ended down by 2.6%, while Woodside Petroleum dropped 2.1%. Oil Search also announced it had secured a new $565 million credit facility with an expiry date of the 31st of December 2026. The new facility replaces the previous $600 million credit facility that was due to expire in June 2022. Oil Search lost 2.7%. It was also a tough day for heavyweight miners such as BHP Group, who dropped 1.7% lower, while Rio Tinto eased 2.5%. Other drags yesterday were the major banks, with the Commonwealth Bank down by 2.3%, while ANZ Bank fell 1.8%. Afterpay also lost 3%, and CSL was down by 1.8%. Winners were few and far between. ResMed was one of the better performing stocks with a 1.8% rise, while Whitehaven Coal also added 1.3%. In company news, Domain Holdings announced that it's increasing its CEO's fixed pay to 1.25 million Aussie dollars. Short-term incentive bonuses have also increased, with Max Opportunity going from 80% to 120% of fixed pay. DHG shares dropped by 2.1%. And the Aussie dollar avoided the heavy selling but remains a touch weaker, buying 73.63 US cents, with mixed Chinese inflation data out earlier in the day. Well, we'll take a look at the performance of markets overseas after a very short break on the Morning Outlook. Stay with us on 𝐊𝐶𝐥 TV. Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news,
we cover it all on our news segments.
Be on top of the latest news
with 𝐊𝐶𝐥 TV.
Welcome back to the Morning Outlook, exclusive to 𝐊𝐿𝐴 TV. I'm James Preston, and in this show we take a look at how the day's trading is likely to pan out based on today's major news and the performance of markets over the past 24 hours. Let's now turn our attention to finance and business news and markets outside of Australia. The European Central Bank said it would slow its emergency bond purchases implemented during the pandemic over the coming quarter, which President Christine Lagarde said was not tapering but refrained from detailing how it plans to end its €1.85 trillion pandemic emergency purchase program. European share markets were mixed on Thursday after the ECB announced plans to slow its emergency support but keep policy accommodative. The Pan-European Stoxx 600 index fell by 0.1%, but the German DAX index edged higher by 0.1%. The UK FTSE index lost 1%, with shares of easyJet down by 10.2%, and London-listed shares in Rio Tinto and BHP both fell. US sharemakers retreated for a fourth straight session on Thursday. Shares of Microsoft and Amazon were among the stocks weighing most on the S&P 500 and also the Nasdaq index. Shares of Lululemon Athletica soared 10.5% after providing a strong annual forecast. Moderna shares also jumped 7.8% after the drug maker said it's developing a single-dose vaccine that combines boosters against COVID and also the flu. The Dow Jones index dropped by 0.4%, the S&P 500 index lost 0.5%, and the Nasdaq index fell by 0.3%. In US economic data, initial jobless claims also fell by 35,000 last week. Longer-dated US Treasury yields fell on Thursday after the US Treasury sold $24 billion of 30-year-old notes at a yield of 1.91% into strong demand. US 10-year yields fell by 4 points to near 1.3%, and US 2-year yields were steady near 0.21%. Major currencies were mixed against the US and European dollars in US trade. The euro fell and was near $1.18.2 US cents at the US close, and the Aussie dollar rose and was near US 73.65 cents at the US close. As for the Japanese yen, it was trading around 109.75 at the US close. Global oil prices eased around 1.5% on Thursday on the back of China's plan to release state oil reserves to reduce pressure on domestic refiners. The US Energy Information Administration said crude stockpiles declined by 1.5 million barrels last week, less than the 4.6 million barrel draw analysts had forecast. The Brent crude price fell by 1.6% to $71.45 US cents, and the US NYMEX crude price shed 1.7% to $68.14 US cents a barrel. Base metal prices climbed on Thursday after China's factory gate inflation accelerated to a 13-year high in August. Nickel rose to the highest level since 2014, with aluminium notching a fresh 13-year high. Tin was also up by 4%. The gold futures price rose by $6.50 an ounce, or 0.4%. Spot gold was trading near US $1,794 an ounce at the US close. And iron ore slid 1.9% on Chinese demand concerns amid muted steelmaker operations and a crackdown in the property sector. Well, that's all for the Morning Outlook report here on 𝐊𝐴 TV. Have a great day trading and stay tuned for more market updates and economic news live throughout the day. This is James Preston signing off for now.